Good evening, traders. Welcome back to the channel. This is Vishal, and you're watching Nifty and Banknifty short-term view. Now, in my previous weekly sectoral analysis, which I shared with all of you last week, if you remember, I had clearly mentioned that IT pack looks good and we should concentrate on IT pack. And you can see the way the IT pack has moved. And in this particular sector, I had shared three different stocks. One was Infosys. You can see the way it has gapped up and it has rallied. Second one was TCS. You can see the way this stock has rallied as well. Unfortunately, in both these cases, in TCS and in Infosys, unfortunately, rather than giving a stable breakout where a person can buy, it suddenly gave a gap up and then the stocks kept flying. So I guess very little amount of people could have participated. But there was also one particular stock which I had shared was BSoft. Not last week, I think last to last week, if I'm not wrong. So you can see the way this stock has rallied as well. This particular stock rallied somewhere around from 713 or 14 till on the upside somewhere around 800 levels. Okay, so it was a pretty good run up. Now yesterday, due to something at my home, I could not make weekly sectoral analysis, but the crux of this last 3 days trading session in Nifty is very clear that we had a consolidation. Although I believe this consolidation was not complete, we needed a little bit more consolidation. Maybe even if the markets could have dipped a little bit more, probably it would be better for all of the traders to have better risk reward ratio on the upside. But we can all understand that market has its own mind and it will always move the way it wants to. So we can see from this particular trading session, which is of 12th Jan, market dates surprisingly gapped up and started moving up, and even today it has given a very decent breakout on the upside with a gap up and the prices are moving higher. RSI, it's like at 83 in the 82.75 or 83 in the hourly charts, and the daily RSI seems to be at 74.46. We need to understand one thing, that at times in a bull run, many times what happens is all these negative divergences, at times they work and at times they will not work. So we need to accept that and trade stock specific. Now, if this rally continues, the next resistance in extreme short term in Nifty spot will come somewhere around at 22,180, just extreme short term. And in positional chart, like the daily time frame chart, I guess the next resistance may come at 22,500 levels. Okay, let's have a look at Bank Nifty. Now in Bank Nifty, we can see Bank Nifty had at least completed a little bit more consolidation in the hourly time frame charts. You can see the way it consolidated, dipped a little bit, and then suddenly it rallied. But in the Bank Nifty chart, it properly corrected and then it gave a breakout. So although the breakout which has been provided by a banking pack, you can see this particular candle is not a very bullish candle. It is inverted hammer, but we can still see the prices going higher. Now the next level, if the rally continues, the next level to be tested by Bank Nifty could be somewhere around 48,384 till 48,500. Okay. Now in banking pack, there are a couple of stocks, like one is Kotak Bank. Okay, Kotak Bank has just started rallying in the hourly time frame charts, and we can also see that this bottom out has happened with a positive divergence, which is a good sign. And you can see the way the prices are moving up. So Kotak Bank is one stock which swing traders can keep watch on, and even HDFC Bank. HDFC Bank, again, if it would have corrected a little bit more and then rallied, would be nice, but again, market has its own mind. It has been able to provide a very decent breakout in the shorter time frame charts, which is the hourly chart. So swing traders can keep a watch on this particular stock as well. But one thing you need to be wary about, that tomorrow is a result day. HDFC Bank, tomorrow is the result. Kotak Bank, the result is on 19th. Okay. So as a trader, it makes sense to avoid taking positions at least in the derivative part. Even if you're taking positions in the cash market segment, we need to understand that if it gaps down by 5%, or even if it gaps up by 5 to 6%, I don't know what's going to happen, because we can have days on the result day session, or maybe the next day, that a stock can gap up or gap down by a very wide margin, which can possibly give a very big profit or a very big loss to your trading account. So your position sizing should be accordingly, that even if it gaps up by 5 to 6%, it should not move your trading account that much. Okay. And if you're afraid of trading just before the result date, then completely avoid these stocks. One more sector as of now looks interesting to me, which has not been able to perform today, is metal pack. Now, metal pack in the hourly time frame charts, somehow it's not looking that attractive. Even in the daily time frame charts, it's not looking that attractive, but it is consolidating. The volatility is coming down. So I guess you can just have a look at these stocks, but also understand that the result dates are around in the starting of the Feb for sale. Then Tata Steel also you need to keep wary. Tata Steel result is over luckily. NMDC still needs to correct a bit more. You can see the way the momentum is shaping up in the early time frame charts. So you can have a look at these stocks in the metal pack also. But again, as of now, they are not looking very interesting in the early time frame charts. What we need over here is a decent breakout. Currently, still the momentum is on the downside. You can see the prices are going down. There's a trend line breakdown over here. But in the higher time frame charts, the stock is just consolidating. So as of now, you can just keep a watch on metal pack and then wait and watch for the right moment. All right. So I hope this video was helpful for all of you to understand how markets will move in the next few days. Just one more thing, we need to understand the way markets are moving, the speed with which the Nifty has been going up on the upside. I guess any type of dip, any type of consolidation around the levels of possibly 22,000 or a little bit lower than that would be bought into. All right. So take care, guys, and trade safely. Thank you.